Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham, and today we're going into our weekly numbers for our portfolio. There's week 26, and it is January the 18th, Saturday. So we're going to go into our numbers. Week 26, the weekend before the inauguration. So we'll see what happens in the market post-inauguration. So here we are with our portfolio net worth, $361.41 as of today, 1/18/2025. Again, you see the pie chart showing the allocations to our different assets. We have our portfolio weekly data for week 26. This is from January 13th to January 18th. We have no net cash flow, so no cash deposited into this account during this week. We have a money weighted rate of return of 1.46%. We have a market gain of $5.47, and no dividends earned. So you can see January 15th, or really the 14th to 15th, there was a good upswing in the portfolio's value. So a good turnaround as the previous couple weeks weren't looking too good. We have our portfolio monthly data for week 26. This is from December 18th, 2024 to January 18th, 2025. So we have a net cash flow of $63.28. So that's two $30 cash deposits. The first one you can kind of barely see right here at the edge of the chart. That was on the, I believe, 18th of December. And then we have January 8th was another cash deposit here. And then the $3.28 likely came from dividends. So two $30 deposits every third week. You know, I'll deposit $10 every week, and every third week it gets deposited into the account and gets invested. So we have a money weighted rate of return of 1% over the month. We have a market loss of $22.75. And then we have a dividend earned of 12 cents. Then we have our portfolio quarterly data for week 26. This is from October 18th, 2024 to January 18th, 2025. We have a net cash flow of $123.43. So you're going to have four $30 deposits. You're going to have one, two, three, four, totaling $120 in cash deposits, as well as $3.43 from dividends. So you see those stair steps over the 3-month period. We have a money weighted rate of return of 3.98%. We have a market gain of $10, and we have dividends earned of 25 cents. So this is our quarterly chart for week 26, going from October 18th to January 18th. Now our percentages. So this is our weekly percentage numbers. We have our target allocations as always on the right. So we have our gold at 30% using the GLD ETF. We have our US dollar at 20% using the UUP ETF. We have commodities at 15% using the USCI ETF. We have stocks at 15% using the RSP ETF. We have bonds at 15% using the GOVT ETF. And we have Bitcoin at 5% using the IBIT ETF. So still have not changed target weightings. I've talked before about like increasing commodities, probably decreasing bonds. Haven't done it yet. Like I said, I want to see post-election kind of what happens. So we have our weekly return from I believe the 13th to 18th of this month. Gold up 0.43% for a market gain of 46 cents. US dollar down 0.13% for a market loss of 9 cents. Commodities up 0.77% for a market gain of 42 cents. Stocks up 3.92% for a market gain of $2.06. So this is where a chunk of that profit this week came from, stocks going up this week. Government bonds up 0.87% for a market gain of 46 cents. And Bitcoin up 10.72% for a market gain of $1.89. So good for Bitcoin. We have our monthly percentages. So this is from December 18th, 2024 to January 18th, 2025. We have our gold ETF up 2.24% for a market gain of $2.25. We have our dollar ETF down 1.63% for a market loss of $1.10. We have our commodities up 4.79% for a market gain of $2.40. So commodities still doing good. We have our stocks up 0.28% for a market gain of 14 cents. We have our bonds down 0.61% for a market loss of 31 cents. And Bitcoin down 0.06% for a market loss of 1 penny. Then we have our quarterly percentages from October 18th to January 18th. We have gold up 1.01% for a market gain of 88 cents. So over 3 month time frame, gold has only moved 1%. So it was a big pullback, and then it's kind of been consolidating. We have our US dollar up 0.91% for a market gain of 48 cents. We have our commodities up 11.57% for a market gain of $4.80. So commodities, man, commodities, doing real good. Just goes to show you that inflation is not going away. If commodities are more expensive, that means the cost, just things and stuff are more expensive. Like whatever you use a commodity for, put it into any product. If that commodity costs more, then that product is they're going to charge more for that product, right? So owning inflation has been a good play. Okay? That's why I say I should be increasing it from this 15% to 20%. But we'll see post-election how things go. Stocks up 0.79% for market gain of down 7.9% for market loss of 34 cents. Bonds down 2.01% for market loss of 96 cents. And Bitcoin up 59.57% for a market gain of $6.40. Why me? Tired still. Bitcoin over the 3 month period still done pretty good. So we still have our position changes. So I added that for this year, 2025, to add more transparency for this portfolio. So you can tell when I moved money between the ETFs. So I don't include when I just add cash, because cash gets distributed amongst all the ETFs based on the weighting. This is whenever I increase or decrease the percentage of an ETF allocation. So I've increased government bonds 3 times between July and August, and then I switched, and then I decreased government bonds 3 different times from October to November. And you kind of just see how it moves. So on July 31st, I decreased my USCI position, which was commodities, down 5%, and I increased my government bond position by 5%. So I sold 5% of this position and moved it into 5%, and I added 5% to this position basically. So that's how this works out. So I'm just going to leave this up here basically every week, so that way people can kind of follow along and see when I actually made changes, so they can understand kind of where their portfolio is at, and then like how we got here. Then we have no portfolio transactions this week. We have our Alluvium staking dashboard. So the current price is $37.12. So it still came down to below $40 level. We have a total of 5.92 IOV staked for a market value of $219.67. We still have the 3 revenue payments, which has equaled 0.024 IOV, which has a market value of 88 cents. We still have our vesting for our 6 different deposits, each of them unlocking at a different time. So they're all individually locked for 1 year. And, the first one was locked at July 27th, then August 24th, then September 25th, October 25th, November 25th. Most recent is December 23rd, and likely this upcoming week, I'll probably do another one. Because Friday, I believe, will be the 25th. Will be the 24th. So maybe Friday or the weekend or something like that, I'll have another one, so you see 7. I remember the more that we deposit via the staking, the more we can gain as from the revenue distribution. So we can increase how much we get by a little bit. So the more tokens you stake, the more tokens you get as a reward, essentially. And we have no revenue distribution this week for week 26. So we're at 0. So we have nothing to claim. and we have no transactions for our Illuvium account. So those are our weekly numbers. So now we can do the charts. So as always, the position we've often started with the gold. You can see going back to October 2023, this has just been in a strong uptrend. We had a breakdown here between February 2024 and March 2024. And we had the same thing here in December 24 and January 2025. So it's come back up into the trend. I don't know if it's going to continue up into this trend. My hope is it is, because obviously gold is the largest position in our portfolio at 30%. I've said this numerous times. My goal is to not really go beyond 30% of a position. I want that to kind of be my max, which forces me to be more strategic with my other assets, and spread up the money and diversify. But seeing gold go up like this would be really great if it continued January, February, and that way, if I also see commodities do the same thing, to me that still signifies like inflation's in the system. It's going to be there a while, so these are good assets to hold when your currency essentially is being devalued and inflation's running rampant in your economy. So gold's been doing great. Pretty much said it since day one of this portfolio, like it's the best asset. I'm holding at 30%. Gold actually outperformed the S&P 500 last year, I think by like a couple percent. I think I don't know, gold was somewhere in the realm of like 27%, 28%, and the S&P 500 was like a couple percent below that. So gold outperformed the largest index in the world, essentially, the S&P 500. And I'm talking about like value, like how much is invested in that index. So a lot of people, even though they invest in the market, gold outperformed it. Long story short. We have our US dollar ETF. So you remember this drop right here was the EX dividend declaration, and as soon as people got it, they pulled out and sold, and they took their dividend. Same thing a year ago here. So I need to look out for that more in the future, because I did not sell out. I just held the position, so of course I took that drop. So when the dividenders came through and took their money, they just like fucking left, and they dropped the fucking price down. But the dollar you see right here is still going up. So if you imagine this little area right here, it would have continued right here, would have kept going up. So if I look at the DXY index to give you a better idea of what I'm talking about, you see it just keeps going up, 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 up. So this is the UUP is basically mirroring or close to mirroring the DXY index. So this is what it would have looked like, but because it's the ETF and if there's manipulation with like dividend payouts and stuff, it took a little short hit, but still 20% in that position. Don't know where it's going to go from there, but as right now, like the dollar is still looking good, and other currencies are dividing against it, so the dollar is still like a strong currency. So we have our stocks, our equal weight. Back since October 23, it's been going up. It broke out of this trend pretty hard, but if you look at this bounce right here, it's coming off this trend line. So I just added this here kind of as a point. I don't know if this would be better, because it really just dropped. Or maybe I do something like that. We'll see. Kind of just trying to gauge where we're at with it, but the drop here, there's a sell-off. There's also I talked about this last week. Look at the S&P 500. There's that drop here like this. So it was hitting high in this range, or in these trend lines, and they started coming down, but it still came about down to the middle of this trend line and just kind of came back up. Whereas our equal weight, it's come down. It came out of this trend pretty hard. And it was like hitting it a few times. It came out here, came out here, came out here, came out here, a tiny bit came out here, and then just dropped. Right, so it dropped out of the range. So there's a bit of a sell-off there, but the trend's still positive, in my eyes at least. But there was a sell-off which brought it down. But I'm hoping this little bit right here is a continuation of getting back into this trend. But I don't know. This trend's kind of high up on the chart, so we'll see. I might have to like redraw my lines, maybe more like I don't like having too many lines, because then shit gets like just fucking all over the place. I do something like that. Even then, it doesn't really capture it that well. We have to be like that. But it's like it's going in a different trend essentially. I don't like that line there. keep this here. See what that does. So that's our stocks. Commodities, Jesus Christ, still strong commodities. So we go all the way back right around here when this trend started in July of 2022, you know, post-pandemic and all the spending, you know, commodities just kept going up and up and up, and then it fucking just broke out of this trend. This is very recent. It just broke out of this trend. Look at it on 1 month, you know, it's been coming out. I'm kind of surprised. I thought it would have stayed in this trend. I didn't think it would break out of the trend. But this is why I've been talking about how, you know, post-election maybe I'll have to see about increasing by 5% into commodities to see where we're at. And I might decrease my bonds position because I just suck with bonds and I've been wrong on bonds a lot and they just keep going down. And I thought, you know, eventually they would come back up, but so far they haven't. But as of right now, you know, this commodities position is doing real good. I think it was like that 11% over 3 months. It's really like this part right here, because October to here is just really been coming up. We have our government bonds. So on a 5-year chart, you know, talking about this big downtrend right here. So this has been bonds since back in 2020, right at the start of the pandemic. Just bonds have sold off. But they had a hell of a year, or hell of a fucking few decades, you know, prior. From like the 80s to the 2020s, you know, the bonds were very, you know, you made money all 40 years pretty much. But the trend has been coming down, but right here, there's like a bit of a bounce that's coming up. So I think I'm just gonna get rid of this. This has been there long enough. Let's do some adjustments. See, something like that maybe. So it's below this trend though, so who knows if it'll make a comeback, but we'll see if it can reclaim this. I believe the interest rate, the 10 year is like 4.6%. Yeah, 4.6. So you see, if you look at it on a long term, you know, you got this really long trend, but you kind of see what I'm talking about here. When this was coming down in the 80s, you know, from 82, 83, 84, 85, 86, you know, 1980s, 1990s, 2000s, 2010s, 2020s, and then just boom, then it reversed. So these were coming down. If you add in, as an example, TLT, new price scale, so it's look all fucked up. You can see, you know, it's been coming up, you know, from the 2000s. I probably need a longer duration ETF to show this, but you know, it's been coming up, and then the trend reversed, and now it's going down, and then the fucking the interest rate's going up. So bonds have not been a good position in my portfolio for sure, but there are strategic assets that have to be there. Like I said, I might reduce it down from 15% to 10%. We'll see. Then we have Bitcoin, good old Bitcoin. So it looks like it's trying to reclaim its all-time high right here. Look at this pop right here. It's going right into the election time too. Should be above 100,000 right now. Let's see. Yeah, 104,000. So I showed this last time too. I don't know if it's peaking, but you know, based on this line, it syncs up pretty well. I just drew a straight line all the way down. So this is the 2017 peak. You know, hit, came down. This is the 2021 peak, hit, came down. This is the again hit in 2021, came up again, and then like right around 2022 started coming down, and then here we are 2024. It peaked and then it came down a little tiny bit, and then it's like trying to reclaim it again. So I don't know if this is going to continue up. You know, it's going to go beyond or it's going to come down, but it's a pretty long-term chart, so we'll have to see what it does based on this post-election cycle we're in. But at the very least, in the short term, it's made good money. I still keep it at 5% just because of how volatile Bitcoin is. It has been in a good trend though for a while, but I just, like I said, it's too volatile, so I keep it at 5%. But as always, you know, I hope you enjoy the update. I'm just like tired today, so I'm very just I feel like I'm just going through the motions today. But you know, we do this every week. The whole point is to update. The whole point is to share with people so they can learn how the portfolio works. If you have any questions, comments, or criticisms, as always, let me know. Thank you very much and have a good day.